Markets crash, but it wasn't panic. Listen up. First, gold just added 10 trillion in market cap in 12 months, up 55%. But crypto is playing by a completely different game. Prices aren't moving because people are buying or selling. They're being manipulated to liquidate weak traders while institutions quietly scoop up coins for the next massive rally. If you think this is chaos, think again. This is a setup for an all-time high. What's up, family? I'm about to give you what's really happening behind the scenes, and it might shock you. And I'm breaking it all down right here, right now. It's Coach Masi, and you're locked into the Daily Hodl. This is where we break down the biggest financial news, Bitcoin insights, and market trends so you can stay informed, disciplined, and ready for opportunity. Let's dive in. Let's start with gold because what's happening here is eye-opening. Over the past 12 months, gold's market cap has surged by 12 trillion, a massive 55% increase. That's not just a number. It's a clear signal where smart money and institutions are moving their capital. And wherever gold is going, Bitcoin is lagging 30 days behind. A big reason behind the surge is the debasement trade. Investors are selling U.S. Treasuries and other fiat-denominated assets because they expect currency weakening and inflation to accelerate, particularly places like China. When institutions reduce exposure to cash and bonds, they naturally move to gold as a safe haven store of value. This isn't random. It's a strategic hedge against the erosion of the dollar. Gold's rally reflects a broader shift in global wealth. Investors are hedging against uncertainty, inflation, and currency debasement. Bitcoin is a part of the same story because it's digital gold. But with one major difference, crypto markets are highly centralized and strategically manipulated. While retail traders focus on price swings, institutions are quietly accumulating massive positions behind the scenes, controlling the liquidity and preparing for the next leg higher to all-time highs in Q4, I believe at least. The surge in gold isn't just about precious metals or rare minerals. It confirms that markets are being positioned for bigger moves ahead. Countries, that are trying to do the BRICS dollar and wealth and rubies and everything else, they're just all trying to get on their own page as they saw that Russia sanctions kind of scared them, being controlled by the US dollar. By not allowing them to sell their treasuries in time of war, really got them nervous. So I'm trying to teach you the bigger picture. These markets are highly centralized and manipulated ways that retail traders don't even realize. Take last Friday, for example. The actual asset selling volume was low, but prices dropped sharply. Why? Exchange oracles were manipulated to create fake price signals, triggering liquidations in low leverage and cross margin positions. Weekends panicked, stop losses were hit, and suddenly retail traders were forced out of positions. Meanwhile, the same institutions who orchestrated the drop quietly accumulated those assets at discounted prices while Europe and China was sleeping. Sound familiar? That's because while everything was going on, weak hands were getting flushed, liquidity was consolidating, and institutions, they're ready for the rally. But here's the key takeaway for anyone following Bitcoin or crypto in general. Don't get caught up in the panic or headline volatility. Don't react emotionally to short-term moves. Instead, understand the market mechanics. Track whale movements, watch exchange flows, and notice when institutions are quietly buying. And if you don't want to do that, watch this channel. That's where the real opportunities are. When everyone else is panicking, smart money is preparing for the next leg up. Remember, this is about seeing the macro picture, not guessing price swings. By understanding how centralized exchanges and institutional strategies impact crypto, you can stay disciplined, avoid common mistakes, and position yourself for long-term growth. Keywords you need to learn: Bitcoin price manipulation, crypto market analysis, Bitcoin institutional buying, fake price signals, crypto liquidity, Bitcoin all-time highs, crypto trading strategies, Bitcoin 2017 and 2020, and all the Bitcoin insights. And that's what we're going to give you on this channel. Because there's massive orchestration going on. And this orchestrated accumulation by institutions, well, it's impacting everyone's wallet. While retail traders are panicking at headlines, these big players are just buying, stacking, and positioning themselves. That's why Bitcoin moves feel controlled and deliberate, even when the broader market looks chaotic. Look at the historical playbook. 2017, prices were pushed down to shake out weak hands. Retail traders panicked, stops were triggered, and leveraged positions were liquidated. Then, as institutions quietly accumulated, Bitcoin exploded to all-time highs, creating one of the most powerful rallies in crypto history. 2020, the same pattern repeated. A short-term crash cleared the weak hands, leaving institutions in control. Bitcoin then soared to record highs, outperforming nearly every asset class. Right? And I know it went down, but that was because of Operation Choke Point and Gary Gensler. And what we're seeing today is eerily similar on volatility in terms of strategy of Bitcoin, pushing things lower, shaking people out, liquidity drying up, accumulating massive positions at discounted prices. Wash trading. Once these assets are in their hands, Bitcoin is poised for significant upward leg. And that's why I think Q4 is going to be great. This isn't just theory. You can see it on chain data, whale movements, exchange flows. Big sell-offs have been met with quiet institutional buy-in for a long time now. And don't forget gold. Its surge, adding trillions in market cap, signals alignment between traditional and digital assets. Institutions are hedging risk across multiple markets, accumulating assets they believe will outperform over the long term. The story here is preparation for wealth creation, not panic. The quarter could be historic, and I want you to know that. The prices and pieces here are all falling into place. Weak hands are gone, right? Gold's moving higher, silver's moving higher, and all kinds are dropping lower. Now you might like Solana or Sui or something like that, but this is a Bitcoin channel because the Bitcoin rally might just eclipse everything that has previously happened. And we already see what's happening behind the scenes. Let's talk about this week, though. You must pay attention to some certain catalysts that I talked about yesterday. OPEC monthly oil report. Hints of production cuts or slowing demand will impact the energy markets and investor sentiment. Fed Chair Powell speaks. Every word matters. Dovish tone could boost risk assets and hawkish markets could shake. I don't think he'll be hawkish. New York and Philly Fed manufacturing indexes. They measure industrial health. Weak readings could signal slowing growth. NAHB Housing Market Index. Mortgage rates remain high and builder confidence is key. And don't forget 10% of the S&P 500 earnings report, big tech, banking, energy companies, they're all reporting. They can set the tone. They are all reporting and they can set the tone. You see, all of these events will influence both traditional markets and Bitcoin's momentum. Smart traders watch for indicators, not headlines. Stay off X. So here's the question. Hodlers, do you see market shakeouts as chaos, or are you starting to understand and recognize them as institutional positioning before the next big move? A little bias there, right? Drop your thoughts in the comments. I want to hear from you. And if you got value from today's breakdown, hit the like button, but more than anything, subscribe to this channel as I'm trying to grow it. And share this video with anyone who loves Bitcoin and financial news just as much as you do, or even interested in it. Remember, this is not financial advice. It's for education and entertainment only, so you can understand the bigger picture and make disciplined decisions with your own money. Well, that's your Daily Hodl. Stay sharp, stay disciplined, and as always, Lead.Pray.Hodl. I'll see you in the next one.